Hey, welcome back to another video, PharMore Money family. Today we're going to be diving in and looking at Peloton and can it sustain and run like it did last year up to 150, 60, $70, right? So stock price obviously after hours came up to $88. So they released earnings today. Lots of info and impacts, hitting Peloton this week. You've got some negative news out there, obviously, with the Tread Plus, John Foley apologizing, the CEO, and then, of course, the deep dive on the stock from over $100 to, mid 80s to today, finally coming back after earnings to, $88. So it did close at $88 after hours. I do see a ton of potential, guys, in Peloton as we move in the future. This is a company that's not going anywhere. It's a great product. I know some of you are probably like, well, that's a great product. Then how come, the Tread Plus got recalled? Well, I have my opinion on that. There's reasons, obviously from a customer facing standpoint that they have to carry out. And I think it's a smart move on John Foley's part to really, make the recall, give people refunds through November 2022. That's big. So let's dive in and see why Peloton can run and why the financials from today also look great for it in the long term. So PharMore Money family, what really happened with Peloton and the price drop yesterday, right? So Peloton recalled its treadmill yesterday, the Tread Plus. Now Peloton stock sank nearly 15%, guys, plus to $82.62 on Wednesday. That's the stock's lowest close since September 16th, guys. Peloton shares were down more than 50% from their closing high of $167.42 on January 13th. It was a worse performer than the NASDAQ 100, which obviously that makes sense. Voluntary recalls for its Tread and Tread Plus following the death of one child and more than 70 reported incidents. The lower-priced Peloton Tread was already recalled due to risks of injury related to its touchscreen inadvertently detaching and basically falling on individuals. So, CEO John Foley reverted back on his statement from a few weeks ago in regards to the U.S. Consumer Product Safety Commission calling the Peloton Tread unsafe for families with young children or for pets. He basically apologized, said it was a big mistake, and, of course, everyone had a field day with it, and, basically the Peloton stock price dropped from the just the negative impact or the negative stimuli that, the negative factors, right, that hit it. So obviously, not the best news to have, a product of yours be recalled, from a share price perspective, but we'll dive in a little bit more to see why, even with the price drop, it going to the mid 80s, there is still a ton of promise for Peloton as it moves forward, guys. And we'll dive into what some of the analysts out there are saying about Peloton, which is very important. So let's dig in. All right, PharMore Money family. So let's take a look at what the analysts out there are saying about Peloton after its dramatic price drop, right? So one of the top analysts for Baird, his name is Jonathan Komp, basically designated it a fresh pick with extreme bullish sentiment, guys. Komp, who has a $175 price target on the stock, called the concerns about the Tread Plus, quite overblown. He said that the recalls are overblown. He estimated that the direct financial impact equates to less than 1% of Peloton's enterprise value, guys. Given any Tread Plus sales disruption should prove temporary and demand indicators for Bike Plus continue to remain strong. He sees a positive trading opportunity relative to recent negative trading action. Basically, he's saying, go ahead and buy and continue buying and don't stop buying. And basically, Jonathan Komp, in closing, said that he would buy ahead of tomorrow's earning report, which we all know, once earnings came out today, the stock ran up $5 after hours. So, guys, tons of promise in that sense for Peloton. These analysts, myself included, right? I assess stocks. I look at the technicals. Peloton is primed to run, especially after such a dramatic drop. You have to expect the stock to have some sort of a bounce back a little bit. So Peloton has a great product. I don't see that, demand dying. Obviously the Tread and Tread Plus, the snafu with that. Once again, my opinion is that if you've got young kids, pets, you should never leave them unattended around any piece of workout equipment, guys. It's like the first rule of thumb, right? Like you don't do that. So let's keep going down the list on other analysts that have said that it's a buy rating. So CFRA Analyst Camilla Yansensky maintained a buy rating with a $170 price target. While noting that a majority of Peloton's hardware sales are related to its bikes, she basically thinks that there are ways the company can enhance the safety of the treadmills for the long run to make it a key pioneer and player in the child safety, workout industry. So that's pretty neat as well from her perspective. Then we've got Raymond Jones and as well, basically saying that it's a buy rating at $160 price target. So as you see, there's a ton of headwinds for Peloton as it moves forward, and I think it's got a ton of promise, guys. These analysts, they're not just saying it just to say it. They are looking at all the technicals, all the balance sheets, all the sales pieces, all the revenue, the earnings per share. Really diving in and looking at what the stock is about and what the company is about. And let's face it, it's a good product, minus the fact that there's a little bit of a snafu with some negative press from some incidents that occurred on the Tread or Tread Plus. Once again, that's nothing that Peloton can't overcome. So that's key, guys. It will overcome this. And I'm telling you, this is a stock like Baird Analyst, the CFRA Analyst, and the Raymond Jones Analyst have said is going to run up and possibly even double your money this year. So stay tuned, guys. Now let's dive into their Q3 numbers showcasing the demand behind the Peloton bike, guys. So, PharMore Money family, let's take a look at the Q3 financials for Peloton that got released on Thursday after close. So, Peloton said Thursday it expects its fiscal fourth quarter sales to take a $165 million hit due to the treadmill recall. They still said that demand for its cycles, though, represents the majority of its business, which continues to remain strong. Peloton reported fiscal third quarter sales growth of 141%, saying recent investments in its supply chain allowed it to improve deliveries, which is pretty incredible and huge. Remember, they had some issues at the beginning of 2020 through mid-2020 with a lot of its supply chain and delivering product on time. So Peloton shares initially fell after its financial results were released. The report didn't disclose any details about the impact of the recall or its outlook, but the stock swiftly recouped losses after the company provided more details on its earnings call. Peloton shares were recently up after close on Thursday as much as 4 to 5% in extended trading. The company expects the treadmill recall, which has halted sales of its two models and delayed the planned launch of a less expensive version in the US, to reduce fourth quarter sales by about $165 million. So even with that, though, John Foley, the CEO, has said that the outlook remains extremely bullish, extremely optimistic for where Peloton is going up ahead. They now expect fourth quarter sales of $915 million, which is lower than the $1.12 billion that the analysts had projected them to hit for quarter four. Peloton also expects to incur added costs because it's offering customers full refunds and will waive all treadmill customers' membership fees for 3 months. This should reduce its fourth quarter adjusted EBITDA just by itself by almost $16 million. Overall, PharMore Money family, here's what the company reported for the third quarter that ended March 31st compared to what Wall Street was expecting. So loss per share was 3 cents versus 12 cents, which was expected. So great. Revenue came in at $1.26 billion versus $1.1 billion, which was expected. Again, great. Peloton's net loss shrank to $8.6 million, guys, or 3 cents per share, from a loss of $55.6 million, or 20 cents per share, a year ago at that time. That was better than the 12 cents per share loss that analysts were anticipating. So lots to like there. It goes with that bullish sentiment that Peloton does know what it's doing, guys, from a financial standpoint, and they will get this, ship righted from a share price perspective. Once again, total revenue surged 41% to $1.26 billion from $524 million a year earlier and topped a Wall Street forecast for $1.1 billion. Their connected fitness revenue rose 140% to $1.02 billion, representing 81% of its sales. And here's the kicker. Subscription revenue grew 144% from 2020 levels to $239 million and makes up 19% of the total revenue, the company said. Sales were driven in a large part by an acceleration of expected deliveries, moving faster, right? They fixed a lot of the supply chain issues. Peloton said, last quarter, it announced plans to invest $100 million in air freight and expedited ocean freight over a 6-month period to help speed shipments. It also recently completed its $420 million acquisition of the manufacturer Precor in a bid to boost its production capabilities in the United States. The company said average wait times for its bike are now back to pre-pandemic levels, which is really cool, guys, because there's just such a increased demand and they're still being able to, churn these out at such a great rate. So basically, John Foley had to say that while progress has been made, additional work remains to reduce delivery times across the remainder of our product portfolio and regions. So lots to like here. I mean, great numbers. Nothing but a solid, overall outlook, even with the Tread Plus snafu. So let's look at churn records now as we move forward. All right, PharMore Money family, let's take a look at the terminology called churn and how that hit record low this past Q3 for Peloton. Peloton ended the year with 2.08 million connected fitness subscriptions, which is up 135% from a year earlier. Connected fitness subscribers are people who own a Peloton product and also pay a monthly fee for access to the company's digital workout content. Average net monthly connected fitness churn, which Peloton uses to measure retention of connected fitness subscribers, hit a 6-year low of 0.31%. The lower the churn rate, the less turnover Peloton is seeing with its user base, which is absolutely incredible and phenomenal. That's exactly what you want to see with a company like this. Any of even the any of the app companies, like you got your Disney Pluses, your Netflix, Amazon Prime Video, you want to see that growth in subscribership and also low churn, so that that subscribers are not leaving. Total workouts, which include those from connected fitness users and from digital only customers, grew to more than 171 million from 48 million a year earlier. The company has been adding new content such as barre and Pilates classes to keep its customers engaged. It's also preparing to launch in Australia later this year as it continues pushing into new markets. So guys, if there's anything that you take away from this video, is that Peloton is going to have its day and its run up in the stock market. Obviously, it's taken a bit of a shellacking the last, week, 2 weeks. But when you've got even people like Jim Cramer, who's come out and said that this is a stock that's not going anywhere, its share price is going to go back up. Those are words that you have to pay attention to. Obviously, I gave you guys the analysis from the Wall Street analysts as well. So lots to like here, lots to digest in terms of Q3 financials, and I can't wait for what they come out with, in terms of earnings release the next quarter, so we can really just digest kind of all the impacts that they took in and took on. As far as the Tread Plus goes, or the Tread itself, it's going to come back out. I don't see this being an issue that will linger with Peloton for the rest of its existence, guys. This is a company that is primed to run and continue to run and be poised for, a nice day in the stock market as well from that standpoint. My personal price target for it is over $170. I think that this company can do it. They've got a great CEO, obviously, not the best approach with the Tread Plus situation, but still, the guy knows his stuff. He's behind it 100%, and that's the key. So look forward to seeing where Peloton goes from the earnings release to the next few months as it progresses along. Thanks so much. If you've enjoyed this video, if you did, please go ahead and hit the like button, and please do subscribe. Turn on your notifications, as videos are going to continue to pour in as we move forward through 2021. This is going to be the road and journey to wealth and to just massive portfolio returns as we move forward. Thanks, everyone.